I'll start this video with a question. So in July 2021, Zomato came up with its IPO and it offered a price range of rupees 72 to 76 rupees per share, okay, to buy the Zomato shares. Now, if you were to apply for this IPO, what price range would you bid for? Would you bid for buying at 72 rupees, 73, 74? The price range is 72 to 76. What price would you bid for? 72 rupees, right? But I would say that you should have answered 76 rupees per share. Why? Let's find out in today's video. So the answer to why lies in this one thing which is known as book built issue. Okay, so now there are two types first of all. So here you see a price range, okay, so they are giving you a range to apply for, that whether you want to buy at 72, 73, 74, 76, right? Another is a fixed price, okay, so generally all the IPOs which you see nowadays are book build type issues, okay, but let's also understand what is fixed price. So in fixed price, what will happen is they'll just give you Zomato IPO price. If Zomato was a fixed price type IPO, they would give you Zomato IPO 74 rupees per share. So in that you do not have a choice. If you want to apply for the IPO, you need to place a bid at 74 or else you can't apply, right? As simple as that. But here they are giving you a choice from a range from 72 to 76 rupees, right? So this type of issue is known as book build type issue, okay. Now, once you understand the process of how this particular issue works and how the final price is decided, okay, so here you see that they are telling you that, okay, we are giving you a choice whether you want to bid at 72, 73, 74, but after that they need to come up with a final price, right? So that price at which they will sell the shares and people will buy the shares, right? Now, how is that price decided? Once you understand that process, you will understand why I told that you should have answered 76 rupees per share. Okay. Now let's say that there was another IPO which was, let's say, priced from 100 to 105. So in that case also you should have applied for the highest price, which is 105. Okay. Why, you'll understand after today's video. Okay. So first of all, two types of IPOs: fixed price and book build. Fixed price, you do not have a choice. Book build type issues, you have a price range, but you should apply for the highest price range. So here you can see the total number of shares which are offered by Zomato. Okay, so they are offering these many number of shares. It is close to 71 crore shares, 72 crore shares. Okay, and these are some different categories across which they are. So retail, QIB is qualified institutional buyer. Okay, so the first concept which I want to clear is everyone who applies for the IPO does not get allotted with the shares. Okay, so what is applying for the IPO? So applying for the IPO means I am placing a bid that I want to buy shares at this price. If I get the shares or not, that is based upon luck. Why luck? Because it's a book build type issue. Okay, I'll explain in further detail in this video. Okay, so now here you can see they have the total number of shares which they are offering is 72 crores, close to 72 crores. Okay, now just see over here. Okay, you can see subscription times. Okay, so subscription number of times means how many times people have, see, for the retail, okay, let's just see for the retail investors. Okay, for the retail investors it's close to 13 crores. Okay, and here you can see 7.45 times. Okay, so what happened is they offered 13 crore shares, but people bid for 7.45 times that's 13 crores. So let's estimate close to 90 crores. Okay, so it's like Zomato offered that to retail investors that I want to sell 13 crores of my shares. Okay, now someone wanted to buy 200 shares, someone wanted to buy 100 shares, someone wanted to buy 300 shares, and the total came up to 90 crore shares, but Zomato was only offering 13 crore shares. So obviously all 90 crore shares won't be allotted, right? Zomato is only offering these many number of shares, right? 13 crores to retail investors. So all the people who applied for the IPO won't get allotted with the shares. What is lot? Let me go to this particular tab. So here you can see the lots is 195 shares. Okay, so the minimum investment is this much. Okay, if you want to apply for Zomato's IPO, and 195 shares you need to apply, and the price was 72 to 76 rupees, right? So let's say that you applied for 4 lots. It's possible that you get allotted with only one lot. Why? Because the IPO is oversubscribed. In this case, we tell that the IPO is oversubscribed. Let's take simple numbers. For example, I was Zomato and me as a company offered 100 shares. Now some people came and told I want to buy 20 shares, some people came and told I want to buy 10 shares, and the total the total number of shares, the demand for the Zomato shares came out to be 400 shares, but I was offering only 100 shares. So in this case, we tell that it was 4 times oversubscribed, right? The demand is 4 times higher than what company offered, in terms of number of shares. Okay, so let's go back to that tab. Okay, so similarly you can see for different categories, here you can see how many times it has been subscribed. So we have two words, undersubscribed and oversubscribed. Okay, oversubscribed means the company was offering X, but the demand for the share was more than X. Okay, so here you can see almost 52 times it was subscribed, right? Here you can see 33 times, here you can see 0.62 times. Okay, so for the employees, the company had offered these many number of shares, but only 62% of them, the demand was only 62% of that, right? So now, okay, now here you can see this IPO price is 76 rupees per share. Okay, now this is the final price. So how was this price decided? Now see, I'll tell you what happened. Zomato offered that the price range from 72 to 76. Some people bid for 72, some people bid for 73, some people bid for 74, similarly till 76. Now based on, it's the Zomato, the company, they saw that okay, for 72, the price of 72, these many number of people have applied for these many number of shares. Similarly for 73, 74, 75 and 76, and they decided the final price to be 76, that I am going to sell my shares at the price of 76 rupees per share, and the people will buy it. Now how was this price decided is the main answer to this video, that why we need to bid for the higher price. So let's go to the Excel sheet and understand how is that price decided. So in this case, we are taking a simple example that company had offered only 100 shares. Okay, so here you can see for the price of 72, the number of shares bid by the people is total 10, total number of shares. Okay, so someone must have bought 2 shares, someone must have bought 3 shares, and the total number of shares which people bid for the price of 72 was 10 shares. Similarly for 73, this much, for 74, 75 and 76. Okay, so if you total this, so this comes out to be 126 shares. The total demand for so the total number of shares for which people have bid for is 126 shares, but we told that the company is only offering 100 shares. So in this case, if you divide this number, you get 1.26. So in this case, we say that the IPO was oversubscribed by 1.26 times. Okay, now let's assume you are the company and you are selling your shares. Would you be interested in selling your shares at a lower price or a higher price? Obviously higher price. So you see that, okay, can I sell my shares at 76 rupees? So you say that, okay, number of shares that people have bid for is 60 shares, but we are offering total 100 shares and here people have bid for only 60 shares if we sell at 76. So now there's a rule. So if the company is offering 100 shares, then the people need to at least subscribe for 90 shares. So 90% of the total number of shares which the company is offering at least need to be subscribed for by the investors. Okay, so the company is offering 100 shares, 90% of that is 90 shares. So the people need to at least apply for 90 shares, but here we are seeing only 60. So now the company says, okay, let's lower the price to 75 rupees per share. So now we still have only 48 people. But wait, these 60 people were ready to buy at 76. They were ready to buy our shares at 76 rupees per share. If we tell them that we are offering at 75 rupees per share, they'll obviously be happy that we were ready to buy at 76. You are offering us at 75. Great, we are still ready to buy. We are even more happier in buying, right? So now if you sum up these both, so it comes out to be 108 shares. We were offering 100 shares. If we sell at 75, people have bid for 108 shares. So the problem is solved, right? Now what will happen is this number of people who had bid for, so number of shares which people have bid for at 76 rupees per share is 60 shares. So let's say there were 3 people and every one of them had bid for 20 shares. Okay, so now they had bid for 76 rupees per share, but the final price was decided at 75. So what will happen is they will get a refund according to 1 rupee per share. So the person who had applied for 20 shares will get a 20 rupee refund, and similarly the other 2% as well. Now what will happen is, see, the price was decided at 75. These people who had bid at 72 rupees, they won't get allotted the shares. These people who bid at 73, these people who bid at 74, even they won't be allotted the shares, right? But these people who bid at 76 rupees, so what was assumed? That okay, you are ready to buy at 76 rupees per share, means you are also ready to buy at 75 rupees per share, right? So this is the reason you should always apply for the highest price, because just for a difference of 4 rupees, it's possible that you won't get the shares only, you won't get the allotment only, right? Because the company needs to do the 90% criteria, right? If the company will see that okay, first we'll see the highest price of 76 rupees. Can we do the 90% from there? No? Okay. Then let's see for 75. If not, then 74. And last option will be this 72 rupees, right? So you should always apply for 76 rupees. See, when you applied for 72 per share, what you thought that I am saving 4 rupees. Okay. But if you applied for 76 rupees and the final price was decided at 72, you will get a 4 rupee refund. What's the difference? Right? So the company just needs to, they match this 90% criteria. So now let's say in this case, let's make this as 3 and let's make this as 48. Okay. Now you tell me, if the company decides the price at 75, these people will get allotted the shares, 1 rupee refund. These people will get allotted the shares. So 60 and 3, 63. But we want that 90%, minimum 90 should be done. So now even these people will come into the picture, right? So 60 plus 48 plus 3, these people, if you sum it up, so this comes out to be 101, right? So now the price will be decided at 74. So these people will get 1 rupee refund per share and these people will get 2 rupee refund per share, right? Now let's talk about the refunds. Okay, so first of all, these people who did not get allotted with the shares, they will get their whole money back. Okay, so you saw that the whole amount was 14,000 something, right? So let's say that you had invested 14,000 and you had applied for one lot, that was I think 195 shares. If you didn't get allotted with the shares, you'll get that whole money back into your bank account, right? So now what happens is, and these people I told you that they will get 1 rupee or 2 rupee refund per share. But now just see another thing, important thing. In this case, company is only willing to sell 100 shares. These 3 sum up to be 111 shares. So people are willing to buy 111 shares, but company is only selling 100 shares. So all of them will not get the shares, right? So even the people who have applied in this price range, even some of them won't get the shares. These people anyways won't get the shares because they have applied for the price of the lower price. But even the people who have bid for the higher price, some people from that category also won't get the shares because company is selling only 100 shares. The total demand is 111. So some people won't get the shares, right? Now, how is this some people decided? It's based purely upon luck. So this is the concept of book build type IPO, right? So in this, just by luck only, so let's say that in this example it was 200, just for the example. Okay, so let's assume people had bid for 200 shares and the company is willing to sell only 100 shares. So 100 shares will, so only, see, let's assume 100 shares company was willing to sell, and this 200 shares which people had bid for, let's say that there are 200 people and each had bid for only 1 share. So only 100 people will get the shares allotted, rest 100 people will get their money refunded, right? So this was how the whole process works. So now I hope you understood why you should always apply for the highest price. So this particular price is known as the lowest. So see, this 72 to 76 rupees, this range, this is known as the price band. This 72 is known as the lower band. This 76 is known as the upper band. Okay, 72 lower band, 76 upper band. This 72 is also known as floor price, and this 76 rupees is also known as ceiling price. Okay, floor price and ceiling price. So you should always apply for the ceiling price. So even if you apply for the ceiling price, and even if the price is decided below that, the final IPO price, which I showed you for the Zomato, was decided at 76 only. So in that case, the people who had applied for 76 and they got allotted with the shares, they won't get any refund. Okay, but let's say the price was decided at 75. So the people who had bid for 76 and they got the allotment of the shares, they will get 1 rupee refund per share, right? So it's not that you are saving money by applying for 72. If the price is decided or something like that, then you will get a refund of the remaining amount. Okay, company won't do something like, okay, I'm selling to 72 for selling to this people for 72, these people for 76. No, a common price will be decided, and how that price will be decided, I just showed you because of the 90% thing, right? So here you can see the IPO price was decided at 76 rupees per share, right? So the people who had applied for 72, 73, 74, 75, they won't get allotted with the shares, right? So I hope I cleared this confusion, and the next time you apply for the IPO, always apply for the ceiling price or the highest price, right? So that was all that I wanted to explain in today's video. I'll see you in the next video. Bye-bye.